Welcome back to the Wall Street Podcast. Today we're digging into a pretty significant report from Goldman Sachs on Tencent Holdings. That's 0700 on the Hong Kong Exchange. It's titled 2Q25 Review, AI Empowering Growth Across Business Lines. Listing TP to HK $701 buy, and it just dropped on August 14th, 2025. Essentially, Goldman's highlighting Tencent's strong Q2, saying AI is really boosting things across the board. This led them to bump up their revenue and EPS estimates and lift that 12-month target price significantly to HK $701. Quite bullish. Let's start with the big investment number, AI capital expenditure. The report flags RMB 90 billion for FY25 estimate and RMB 102 billion for FY26. That's a lot. How does the report suggest this translates into actual growth, not just, higher costs?
Right, that's the critical question. And Goldman seems convinced the investment is paying off directly. It's not just sunk cost, it's fueling tangible results. Take advertising, for instance, up 20% year on year.
20% up.
Yeah, and they attribute that largely to upgraded AI foundation models improving click-through rates, so more effective ads.
Yeah.
Games also saw strong growth, up 22% year on year. Here, AI helps with things like smarter NTCs, better content generation pipelines, making games more engaging.
Right.
And then cloud services. It's not just standard cloud growth. It's specifically the demand for GPU rentals and OPI token rentals. Companies are essentially renting Tencent's AI power.
Direct monetization of the AI infrastructure itself.
Exactly. And even within WeChat, you're seeing AI enhance things like customer service and mini shops.
Interesting. So that investment to revenue link seems quite clear in the report. Now, about gaming, they've revised the growth outlook upwards. 18% for FY25 estimate, 11% for FY26. What's driving that confidence?
Well, two things mainly. First, Tencent's platform approach. They're focused on stabilizing revenue, relying more on evergreen titles rather than just hit-or-miss new launches.
More consistency?
Right. But second, they do have major new growth drivers. Delta Force is one projected RMB 9 billion annualized revenue, already top 5 in daily active users in China.
That's significant.
And then there's Valorant Mobile, launching August 19th. Huge anticipation there, over 60 million pre-registrations. That's estimated at RMB 7 billion annualized revenue potential.
So balancing the evergreen titles with these big potential hits.
Precisely. Diversification.
Okay, shifting to marketing services. Projections there are also strong. 19% growth for FY25, 16% for FY26. What's the engine behind that, especially in Huateng?
Again, AI is a huge factor. The AI-driven ad tech improvements mean better ROI for advertisers. That's key.
Right.
This is helping them scale monetization from newer avenues like video accounts. That revenue grew 50% year on year.
50%.
And Huateng's search revenue up 60%. Many programs revenue also up 50%.
But I saw a point about ad load.
Yes, that's the longer-term potential. The ad load in video accounts is still quite low, like low to mid-single digits.
Compared to peers?
Peers are often in the mid to high teens. So there's significant room for Tencent to increase ad inventory there without, overwhelming users. Lots of upside.
Got it. Now, what about fintech and business services, FBS? That seems to be reaccelerating too. 9% growth projected for FY25, 8% for FY26.
Yeah, that's picking up steam. In fintech, it's better transaction volumes, likely tied to general economic activity, more digital payments. For business services, it's strong international cloud growth, and again, those specialized GPU and API token rentals we mentioned. It shows Tencent becoming an AI infrastructure player.
So across the board, AI seems to be the common thread driving these upgrades.
It really does seem to be empowering growth across all their core lines, just as the report title suggests.
And impressively, despite all this heavy AI investment, operating margins are actually expected to expand. They're anticipating 19% adjusted operating profit growth in Q3.
Which indicates the efficiency gains and revenue growth from AI are more than offsetting the Capex, at least based on these projections.
So thinking about the bigger picture, how do these AI advancements, especially within something as massive as WeChat, actually impact daily life for the average person, for you listening?
Well, it's about making digital interactions smoother and more efficient. You'll likely notice better customer service from businesses using mini shops, thanks to AI handling queries.
Okay, less waiting, maybe.
Potentially, or just more accurate answers. AI-powered search within WeChat should also make finding information, products, or services faster and more relevant to you. And looking ahead, the planned AI assistant within WeChat that aims to be a kind of central hub, helping manage tasks, providing personalized recommendations. It's integrating AI deeper into your everyday digital routines.
Making the super app even more central.
Exactly. more useful, more efficient. So maybe something to consider is how this relentless integration of advanced AI into platforms we use constantly, like WeChat, is going to change what we expect from digital tools. It could really transform our daily interactions, commerce, making things much more personalized, maybe more automated.